when you implement the infinite banking concept and you do it the way that my late mentor intended, and you make it ridiculously simple and you don't sensationalize it, you become all four characters in the financial play. You're the depositor, you pay premium. You're the borrower, you're the one accessing policy loans. You're the banker because you control the repayment schedule. That's money on demand on your terms. You're the banker.
Yep.
You're the bank owner because when the insurance company produces a divisible surplus called positive net income, that divisible surplus must be distributed to the owners of the company. And in this case, we're dealing with a mutual life insurance company. There are no stockholders to participate in that. So when you become all four characters in the financial play, what a peaceful, stress-free way of life it is financially.
Yeah.
Right? And it's not, Nelson, he never said, hey, I want you to be the bank. He didn't want anybody to become a bank in the conventional sense of the word. He wants you to control the banking function as it relates to your needs because someone must do that.
What is up, the Science of Flipping family? I am back with another incredible guest. For us real estate investors, what Jayson Lowe has to say on this episode is going to be incredibly impactful because you need to control your money, you need to know how to borrow money, and you need to know how to invest your money. Best of all, you need to understand how to not pay taxes. Jayson Lowe, Ascendant Financial, is here with us. What is up, buddy?
How you doing, Justin? It's great to be with you.
Hell yeah. Excited to have you. As a real estate investor for 18 years and making a ton of money and understanding taxes and understanding how to borrow money the right way and how to invest my money. I mean, this is such a poignant episode. I'm super excited about getting rocking and rolling with you. So speaking about what Ascendant Financial does as a whole, let's start there. What you do, what Ascendant does. What is the totality of what you guys do? And then I'm going to bring it granular into the trenches.
That's a great question. You know, we've been working with people across America, people across Canada since 2008. So you've been a real estate investor the past 18 years. Did I hear that right?
Yeah,
and we've been serving real estate investors the past 16 years.
Hell yeah.
And a few common traits come up. We haven't met one yet that doesn't want access to capital on demand on their terms. And so that's what we serve.
$5. Can I get $5?
Okay, there you go. You just got it. That's But through the infinite banking concept, that's what we've been specializing in all this time. And real estate investors love it because they get to control how they borrow capital, how they invest it. They get to repay loans on their terms, not someone else's. They get their money working for them instead of the banks. The banks and the government are the last two entities that real estate investors want their money working for.
There's no doubt.
Yeah.
And one of the things, just from my own understanding, and you're the expert, but like even just how the banks, when you do have your savings account and how they basically are arbitraging your money to go get a better return. And so like, you know, the banks aren't exactly ideal. And, you know, I don't ever live my life cash heavy,
right,
partly because I'm a real estate investor. I know how to flip money. But let's talk a little bit about the banking system, if you will, and your thoughts on it, and maybe give some suggestions on how people should look at the banking system. Because I just know how to flip money too fast for me to keep a whole lot in the bank. But what is your thoughts given the financial, you know, in the banking system?
Well, I would say first and foremost, banks are not your friend. I mean, let's be honest. They're just not, and they create money where no money existed before. That would be like me pouring you a glass of whiskey, drinking it myself, and charging you for it. It doesn't make
a great analogy.
It doesn't make any sense. But the fundamental truth is that your money must reside somewhere. And through the infinite banking concept, there's no better place to have it reside than in the form of dividend-paying life insurance contracts, where you essentially become the banker as it relates to your needs. You get ready access money on demand. The real estate investors, Justin, that I work with, they owe a lot of money. And so whether they're flipping or whether they're buying multifamily, they're in a long-term, you know, buy and hold scenario.
Yeah.
They owe a lot of money. And when a ready access opportunity of a high caliber shows up, the real estate investor either has to joint venture to raise capital to take advantage of it. That takes time. But if you can pounce on high caliber opportunities when they track you down, then that creates a significant advantage for you in building your wealth. And you don't have to have money flow through the banking system, which is exactly what's been creating the financial mess that we find ourselves in. Just look no further than the central banking system. It's a horrible mess
Yeah.
that we're in. And the people that I talk to, they say, I feel like there's something fundamentally wrong out there financially.
Sure.
I just can't quite put my finger on it.
Sure.
That's
How do you
that's
like that
courtesy
unicorn,
of the
by the
central
way?
banks.
How do you like that unicorn Band-Aid my daughter put on me? Anyways, I digress for all the you guys listening to that. So what is the better play?
Well, the better play is to pay premium into high cash value, dividend paying life insurance contracts. You become a co-owner of the life insurance company the moment that you initiate a contract. You've got a guaranteed death benefit, which matters. We've had to deliver a disproportionate number of death benefit claims to families, and we've never had a grieving family say that they had hoped the check was for less or that it was taxable.
Mm.
And you get contractually guaranteed daily buildup of cash value that you can borrow against without interrupting any of its ongoing compounding on demand on your terms. So if you know that there's a place that your money can reside where you can contribute almost unlimited sums, you pay no tax on the daily buildup, zero tax. You get ready access capital on demand on your terms. You pay no tax on the death benefit proceeds. You've got no government hovering over that asset with a giant knife and fork waiting to consume it. How much of your capital do you not want residing there?
Right. I mean, I would tell you guys, as someone who does own multiple policies myself, so I'm very well aware of, Jason, what you're talking about, right?
Yeah.
Um, I think one of the things that people need to understand is compounding interest. If people aren't even thinking about compounding interest, it's like the eighth wonder of the world or whatever it is, right? I mean, it's just incredible. But being able to borrow money that essentially doesn't have an interest rate on it is so valuable for us real estate investors, right? Because you mentioned almost every real estate investor you've ever talked to has debt, right? Has a
Right.
lot of loans, is borrowing a lot of money. Well, because leverage is good in our space, right?
Of
If you're
course,
going and paying
100%.
cash for everything, I would tell you not to. But when you can borrow your own money, essentially borrow against your insurance policy and have no dedicated interest payment. Now, if you pay yourself interest, smart idea. But you don't have the bank's interest laying on top of it, that deal becomes infinitely more profitable, right?
1,000%. If you and I got together with another real estate investor and we were presented with the very same high caliber opportunity, and that outside real estate investor had to borrow capital from the books of someone else's bank to participate in that opportunity, that's great. They got to achieve the objective. They got to participate in the opportunity. Whereas you and I, we request a policy loan from the life insurance company to participate in the very same investment opportunity. You and I are going to come out ahead all day, every day. The other real estate investor can't compete because the other real estate investor has no ongoing compounding of capital. My cash value and your cash value continues rising daily while the real estate investment is appreciating in value. And we used the life insurance company's money to capitalize it.
Yep.
And when you contrast that with any other way of financing a project, any real estate investor that we work with would never say to you, gosh, I wish it would have taken longer for me to get access to capital for that opportunity. And man, I just don't feel like I'm taxed enough. And gosh, I wish it was just even more stressful to,
I mean, that's the other
to
part is tax-free, right? And so
100%.
what I'd also say, like, I'll bring it down to the super layman terms. Maybe you're not acquiring assets to hold. Like, you could do this with anything. You can buy a car.
Oh yeah.
Like the car interest rates right now, I just bought a brand new Range Rover, right? I got, I guess, a good interest rate for what the economy is offering right now, right?
Yeah. Yeah.
So I got like 6% on a car. I was like, I don't love it, but I had 4% on my Range Rover before that. But I say that to just say, like, well, because I used my life insurance policy, I have
Yeah.
no interest rate. I have to pay myself back. Now I can pay myself back with an interest rate and be a smart investor. Say, hey, if I'm borrowing money, I should pay the money, but I don't have to. And my money is still compounding. That's the point you're trying to drive home right there, Jason. I borrowed it
100%.
and it's still compounding.
Well, and I would ask you, and you can attest to this. We didn't discuss this before the show. But I'll just ask you, we'll just jam on this for a second.
Yeah.
So just name one institution that uses compound interest.
Attention real estate enthusiasts and investors. Are you ready to transform your investment strategies and skyrocket your returns? Join Jason Hartman and his team at Empower Investor Live. This isn't just another conference. It's your gateway to mastering the art of property investment with insights and strategies from the industry's best, including our host, Jayson Hartman. Keynote speakers include Sharon Lechter, Mike Maloney, Tom Wheelwright, and more. There's no sales pitch, just real, innovative, actionable content and tools. Whether you're a seasoned investor or just starting out, you'll discover secrets to creating lasting wealth through real estate. Know what is coming next. Learn market trends, innovative tools, and network with fellow investors. Secure your seat now and be a part of the movement that shapes the future of real estate. Empowered Investor Live is the opportunity to make 2025 the year you break all barriers to success. Visit empoweredinvestorlive.com today for your ticket to financial freedom. Don't miss out because spaces are filling fast. Go to empoweredinvestorlive.com now. Empowered Investor Live. Invest smarter, grow faster, transform your future. Life insurance?
Life insurance companies, okay, that's certainly one institution. Any other that you can think of?
Banks?
Banks. That's the most frequent response that we get. Banks don't use compound interest. They either charge it or they pay it. So the only way for your money to compound is for it to sit still. And so the banks want your capital, and they want it for a long time because they get to, obviously,
they flip it.
They thank you. You took the word right out of my mouth, which aligns perfectly with the show.
That's right.
Banks are in the flipping business, but they're not dealing with tenants at 3 o'clock in the morning with a busted water heater.
That's right.
They're flipping capital. We're doing the same thing. And if I just bring it right down to the you and me level, fundamental truth, our money must reside somewhere. Can you and I agree on that?
Of course, yeah.
And so what better place to have it reside than within the attributes of what we're describing? And when you pay that premium into that policy and it produces cash value and you can borrow against it on demand, does that take away any of your options as a real estate investor? It amplifies your options.
It totally does. I'm even thinking about, like, right now we just bought a fix and flip, and I think we got 11% loan on this fix and flip. Now, hard money is a very common thing for all of us on here. If you just go and take that same amount of money, because we run our economics, basically, we don't want to flip a property without making 50 grand net after cost, fees, blah, blah, blah.
Okay.
But we underwrite it for 6 months, and 6 months of 11% interest on essentially we're paying $2,000 a month. So times 6 is 12 grand. I just turned a $50,000 profit into a $62,000 profit because I borrowed the money from myself. So I want everyone listening here, a lot of people here, like, I don't have money, or I don't know. Well, do you have a savings account? Do you have a self-directed IRA? Or, because self-directed IRA, sure, you don't pay interest unless you take your money out before the age that you cannot pay interest, right? And you take your profits out. In this case, like for me, because I'm so familiar with it, like, you can take your money out monthly. Every month that you put money in, you can take your money back out. Right? And so I'm saying that because as a flipper, it's just easy capital, right? It's as easy to use as like 3 clicks of a button on your computer.
Can I share an example with you that tends to really resonate?
Yeah, of course.
So when I first began my journey with the infinite banking concept, so this was back in July of 2008, you could still get 40-year amortizations on mortgages. I was an active real estate investor in both the United States and Canada. And up in Canada, you could get a 40-year amortization schedule on a mortgage. So we bought a residence. The mortgage was about $426,000. And we thought, wow, this is terrific. Interest rates were below 3%, 40-year amortization schedule. We're standing on top of the world. That was in April of that year. I got introduced to this concept in July of that year. We got rid of the conventional bank 7 years later, so 33 years ahead of schedule. And we did it in a ridiculously simple way. We paid premium into high cash value, dividend-paying life insurance policies on my wife and I, and then our 4 kids. We borrowed against that ever-increasing accumulation, which can't go backward, by the way. So you have several policies. There hasn't been a single day where your cash value has gone backward. We borrow against that accumulation without interrupting its daily growth. We pay off the conventional bank, but we now have a policy loan balance. But we don't have any debt owed in the form of a mortgage. So the payment that we would have otherwise been contractually bound to continue sending to someone else's bank, I say that again, someone else's bank, for the remaining 33 years of that 40-year amortization schedule, we're changing the process of who's getting the payments and who's getting the money. The first person I called was this gentleman here, my late mentor, the late R. Nelson Nash. He wrote the best-selling book titled Becoming Your Own Banker. This book is self-published. It sold more than 575,000 copies. Wow. For a reason. Process works. So he developed it, pioneered it, engineered the process. He was the first person I called. And given that he lived and worked in Birmingham, he had this, Southern drawl, and I called him. I said, "No," I said, "Nelson, you're not going to believe it. I got rid of the conventional bank 33 years ahead of schedule." And he said, "Take a seat, boy." And I sat down, and he said, "You want to be an honest banker, don't you?" I said, "Yes, sir, I do." He said, "Well, I need you to finish the original loan schedule." And I said, "What do you mean?" He said, "You've got to change the process of who's getting the remaining 33 years of payments. Otherwise, your expenses are going to rise to find that new surplus cash flow, aren't they?" I said, "Yeah." And he said, "Well, get to work." And we've been continually replenishing our family's money pool. But here's the thing that people need to understand. You used the example earlier about a car. Such a great example. You can either pay cash for it, lease it, finance it, or steal it. Most people don't do that.
Probably not going to steal it.
Fourth option. But when you pay cash, lease, or finance, every single one of those methods is a permanent transfer of money away from you. Just think about it. Every payment you make is someone else's passive income.
That's right.
So if you can redirect where that financial money, where that energy is flowing to inside of an entity that you own and you control, if you can do that with property, if you can do it with vehicles, if you can do it with what we do, like my premiums are $1.56 million a year. We have 77 policies in our family banking system.
Wow.
We practice this process as a family. Think about this. When you were growing up, stop me when I'm wrong, did you ever hear your parents or somebody close to your family say, "Justin, someday you're going to wake up and you're going to move out and you're going to start your own family. You're going to have your own bills. You're going to have your own financial obligations. You'll truly understand what financial responsibility is." We've all heard that growing up. The wealthy don't speak that way. The wealthy circle the wagons around the family. I want the mortgages, the loans, the business investments, the real estate investments, the cars, the property, the appliances. I want all of that money for those things flowing back to the family banking system, not onto the books of someone else's bank. So what real estate investors tell us, we love the fact that you coach us on how to do that. If you went onto a job site and you're at one of your flip projects and you handed the best tool to get a job done to somebody who doesn't know how to use the tool, they're not only going to break the damn tool, they're not going to turn out any good work with the tool. So that's why you need a really good coach that can be your infinite banking guide. And that's what we are at Ascendant Financial. And we're the best at what we do, bar none. And I am bragging when I say that.
I love it.
Like, we are the best at this, bar none.
Yeah. It's such a tool that you got to really, I mean, what you even said about your personal home, right?
Yep.
And what you're talking about is really what I believe in, is be the best banker. Like, just because you're not paying Bank of America, you should be paying yourself back, right? Now I would even make an argument, give yourself a little interest rate, because the thing that people probably don't know, so I want you to clarify it, and I know it, but
Sure.
when your money is out, your guaranteed interest is just a lower amount. When your money's full in the account, the amount goes up. Is that correct?
No.
The interest rate varies. So there's a steady, my understanding, there's a steady 6% or so that I'm earning. When I pull the money out on a loan, that goes down to about 1%, still working. There's a 6% total. So maybe I'm wrong. So clarify that for me.
Yeah, happy to do that. And thank you for bringing that up. That's something that we get asked around interest rates and growth. In the United States, the cash value of the policy is contractually guaranteed to match the death benefit by age 121 of the life insured. It's age 100 up in Canada. So every single day that you're aging, your cash value is rising. Every premium that you pay, the death benefit permanently increases. The premiums can never go up, but the death benefit is ever increasing. Every dividend that gets declared, which once it's declared once a year, is contractually guaranteed to be paid. It can't be repossessed. It can't lose value. That permanently increases the death benefit of the policy. So Justin, if you never borrowed against the ever increasing cash value of your policy, it is going to continue growing uninterrupted.
Correct.
When you borrow against your ever increasing cash value, it is going to continue growing uninterrupted. It is not the policy loan that is affecting the growth of the cash value. It's you aging daily. That's the difference.
Got it.
And when we hear people use language like, I've got my money, $1 doing the job of two, or this is the secret that the wealthy don't want you to know. And, but forgive my language, but that's all just a bunch of bullshit.
Okay.
You're paying premium into an insurance contract, and you become a co-owner of a life insurance company that's never failed to produce a divisible profit. And you're dealing with people who cared enough to insure their own lives. That's the pool of owners that you're dealing with. What a great group of people to be in business with.
Yeah.
And when you borrow capital in the form of a policy loan, the cash value of the policy continues rising uninterrupted, as I've mentioned. When you repay that policy loan with interest, that extra interest is a direct contributor to the net earnings of the insurance company that you co-own. So Justin, if you and I owned a Publix grocery store together, would we ever buy our food from Walmart?
Never.
Because we want our grocery store to be profitable.
Right.
We want our grocery store to have more money to go buy more groceries
That's
to
right.
sell to more captive customers, right? So when people are introduced to the infinite banking concept in a way that sensationalizes it, like you can get rich buying cars, you can get rich buying real estate, you can get rich just being your own bank. That's nonsense. That's sensationalizing the message. It's ridiculously simple. Somebody has to perform the banking function in your life. There are no exceptions to that, period. And your money's got to reside somewhere. The person that should be controlling that function of banking in your life should be you. And it's very simple to do. And you should have a good coach that can help guide you so that when you have a system of policies in place, you're not creating a scenario where you're not only not turning out any good work with the tool, but you may end up inadvertently breaking the damn tool. And so you've got to have a good coach and a guide to help you along.
Speaking of that, where can they find you guys? Find Ascendant Financial. What's the fastest way that they can find you?
There are two forks in the road. So the first fork in the road is go directly to ascendantfinancial.com. That's our website. It's a treasure trove of great resources. But if your listeners, as I mentioned to you before we got on, if they text the word bank, so if they text the word bank to 813-793-7921, that's 813-793-7921, we will courier directly to them at no cost. No, hey, you got to pay the shipping or any of that stuff. We'll courier to them what we call a banker's vault. And it's a box of resources, including this #1 best-selling book. It's a 92-page read, including one of our best-selling quarterly books titled Don't Spread the Wealth, access to our private Facebook community, access to all of our resources, pre-recorded webinars, live events, our Wealth Accelerator package, all of that on the house at no charge. Have you ever heard someone give you the advice to give away your best stuff for free?
Absolutely.
We live and breathe that. We walk that walk.
Yeah.
And so that is just our token of gratitude to your listeners for investing a little bit of their time and making the right decision to text the word bank to that number.
Now, let me ask, as a fix and flipper,
Yeah.
you take a loan from your insurance,
Yes.
round number, 100 grand.
Yeah.
You profit. You make 20 grand. You have
Yes.
120 grand. Does all that 120 grand have to go back to insurance, or can I keep the 20 grand and just repay the 100 grand?
You can repay as little or as much as you'd like. When you access a
There's a trick
policy
question.
loan,
I was wondering how you were going to answer it, because I know
yeah,
the answer.
yeah. No, please trick away. Ask me anything
No,
that
I
you'd
love
like.
it.
But you're in a position of total control as it relates to the repayment schedule of your loans. The only reason why that is true is because the insurance company itself guarantees the collateral for the loan. And when you borrow the capital, you're not triggering any reporting to Equifax or TransUnion. It's a private loan between you and the life insurance company that you co-own. You have all the gold, you make all the rules. And real estate investors tell me that gives them a lot of breathing room when they have projects that run over budget, that run over schedule, that would otherwise create some very tense scenarios where they either have to repay a hard money lender and they're on the hook for that, or they've got to repay someone else's bank and their project hasn't been flipped yet. It's not done. It's not generating positive cash flow. The life insurance company doesn't have a lien on the real estate. They place a lien on the death benefit for the loan balance. And so that puts the real estate investor in a position of total and absolute control. What a peaceful, stress-free way of life it is when you get the banks out of your life. I mean, it's I'm
Yeah,
living proof of that.
what I wanted you guys to really hear by me asking that question, him giving the answer, the money's coming from the insurance, right?
Mhm.
It's a lien against your insurance policy. So God bless it if you were to borrow 100 grand and die the next day.
Yeah,
Your life policy is just 100 grand lighter than it would have paid out, right?
that's right. Yeah.
And so I want you to understand what he's saying is there is no bank leaning the property. There is no personal guarantee that you have to say, I'm willing to repay this. You technically don't ever have to repay it. The difference would be is if you don't repay it, then the day you do pass, because it's inevitable, you're 100 grand light on that policy,
Plus accrued interest on that loan balance.
right? Plus
Yep.
accrued interest.
Yeah. And what's interesting is that people, again, I can only speak to, because we interact, as you can imagine, with thousands of people every year. And we hear some common things from people who have been introduced to the concept out there in the marketplace. And they're leaning toward an either or scenario. Like, should I invest in real estate or should I put money into dividend paying life insurance contracts? This is not an either or discussion.
Mhm.
Regardless of what you're choosing to buy, like you mentioned, you can do this with anything that you would otherwise pay cash, lease, or finance. The money's got to come from somewhere, supply source. And if you're borrowing capital from someone else's bank, you wouldn't do that without every intention of repaying it. So this is about the infinite banking concept being a lifestyle, not a financial plan. And when you borrow capital from the life insurance company, you shouldn't be borrowing it to begin with unless you have a plan to repay it.
Mhm.
Being in control of a repayment schedule can be a downside too, from a human condition standpoint.
No doubt.
And so that's why, again, I can't emphasize enough, just make sure that you're working with a guide, somebody who can sit down with you and say, Justin, let me give you a sample size of 100 reviews from existing clients sharing their experience with me. That should give you a pretty good indicator of my proficiency. And
Mhm.
then I've got a demonstrated track record of being a good coach.
Yeah.
And at Ascendant, we've got thousands. Just hang out with Uncle Google for a little while and check out all the experiences that people are sharing.
When you say coach, I come from the coaching space in real estate, right? So I coach newer investors. They break into the industry, get their first several deals, et cetera, right? So my definition of coach may or may not be similar to yours. When you are a coach to these individuals, what did they get with that coaching?
Real simple. So as a coach, we're responsible to you, not for you. And we do quarterly group coaching sessions with clients who can parachute into those sessions. They're networking with like-minded individuals who are practicing this process. They're learning a variety of different methods of how to integrate that into their business, their family. So it's a very, very strong community of people who implement this and practice this in their daily lives. We do annual family banking events that we invite our clients to. These are incredible events. Clients are bringing their spouses, their kids, their key people in their companies. We do breakout sessions. We coach them by actually coaching them, and we show them the way. And then it's up to them to do the work and to
Yeah.
do the work for their family, their business, for whatever it is that they're implementing the infinite banking concept to achieve. But we make it remarkably clear. The the two most important words in the title of this book are right here.
Your own.
Your own, becoming your own banker. We don't want people to develop a dependence on us. We want people to develop independence so they don't have to rely upon a conventional bank for anything other than the convenience of debit.
Yeah.
What a stress-free way of life that is.
Well, I think people are going to love this, and I want everyone to reach out to Jayson and go to Ascendant Financial and text the number. Say the number one more time. Text bank to what?
Yes,
What
sir.
was the phone number?
Yeah, text the word bank to 813-793-7921. That's 813-793-7921.
You're probably going to have a lot more questions as you're listening to this. You'll probably get off this episode, or if you're watching this on YouTube, you'll probably stop watching and then walk around your house and be like, man, this is really cool. And then what about that? And what about this? And what about this? That is why I want you to reach out to Jayson and his team, because the reality is, as investors, we think in a very, well, I don't want to say linear, but we think in a historically taught, right? Meaning you borrow money at a certain percent, you pay it monthly, you repay the loan, and you keep the profits.
Yeah.
We also work with self-directed IRAs and 401ks. The
Mhm.
difference there, the people that do profit from it, they can't necessarily keep the profits and put it in their pocket because they will get taxed on it.
Right.
To Jayson's point again, this breaks you out of that model. There is no, if you make the example I gave, you use this policy, you borrow 100 grand, you make 20 grand. Let's just say you're an okay banker and you pay your 100 grand back. You're not a great banker, you're an okay banker. You gave the money back, but you kept the 20 grand. You're not getting paid. You're not getting taxed on the 20 grand in the traditional. You're getting taxed income wise, right? Because it's still income. But you got to think outside the box there. That 20 grand is still going to be your company's income as a fix and flipper. But you're just reframing this, right? So the last thing I wanted to point out to a lot of people out there are concerned about raising private money.
Right.
I've done a really good job raising money through people that have retirement accounts, right? Because their money really isn't making them any money. This is a next level layer of it. I have done a really good job in the last, call it 4 years, 5 years now since COVID, where there's enough people that understand the model that people are like, can I use my insurance money? That's what they're saying to me when talking about investing with me. And I say, absolutely.
1,000%. Yeah.
Is raising capital from money that's already in the insurance. And by the way, it's not theirs. It's the insurance company's money.
That's right.
It's not even their money. It's the insurance company's money, right?
That's right.
And so, guys, if you're thinking about raising capital, if you're trying to figure out where to find it, thinking no one has it, you need to be talking to Jayson and their team, because this is the next level of raising money, right? So again, historically speaking, we're taught find people that have retirement accounts. But now I, at least, am talking about this. I'm talking about, hey, there's a lot of people out there now. This is gaining traction. This isn't a little known secret anymore. And people like Jayson are at the forefront of that. He's a thought leader. He's out there. Ascendant Financial is out there. They're there for your help. And so do you see that a little bit or frequently that people are using it as lenders as well, and they're taking their insurance money and lending it out?
Absolutely. And we amplify that intentionally. So within our client community, so we have a program that we've named Lend to Profit. Lend, the number 2, profit. There's typically 2 parties to the transaction.
Yeah.
And within the community, our clients can engage with one another and say, hey, we've got a high caliber opportunity. Do we want a joint venture on it? Do we want to pool capital together? And what a great group of people to be aligned with in that type of transaction because you know for certain they're life insured. And so you've got
Yeah.
some indemnification there, God forbid if the unthinkable happened. And you know that you can close on a transaction quickly because when you contact the life insurance company to get access to capital, they're asking you two questions. Do you want us to electronically deposit the money into your account or mail you a check? There's no income verification, credit check, personal guarantees, letters of credit, any of that additional underwriting that's typically involved with borrowing capital, even from a hard money lender. This is ready access capital on demand on your terms. And so I love that you touched on that because our lend to profit program is nothing short of awesome.
Oh, guys, you have to go talk to Jayson. I mean, him and I could probably go down rabbit holes that might get a little confusing for most. He's obviously the expert, but I know enough. I have several policies. This works in all assets, right? It works for all reasons. Like I used the car example. I know we're talking about real estate, but like it's as simple as that. Like you want to go, the new Range Rover isn't cheap, and I'm like, okay, well, if the bank's quoting me what's considered to be a good interest rate right now, but I have capital sitting in my insurance policy, why wouldn't I just be my own bank?
Right.
Right? Because there's no real reason to pay the interest rate. And if I'm going to pay an interest rate, why wouldn't I pay myself the interest rate? Does this make sense to everybody? I hope they understand.
There's, have you ever heard the Shakespeare quote? How does it go? The world is a stage and most people are actors thereon, something to that effect.
Something I've
The
heard it. I
whole
know you're
world is a
saying.
stage and everyone in it are actors thereon.
Yeah.
And the way that my late mentor, God rest his soul, I miss him. I think about him every single day. I was just blessed beyond the definition of good fortune to have spent such quality time with him. And he would often use an analogy that was so ridiculously simple. He said, if we were to examine 99% of the American population and we were to take a look at what percentage of that population understand A, that there are characters in a financial play, or B, that there's even a financial play going on. You've got the depositor, the borrower, the banker, and the bank owner. Ridiculously simple. You earn money, regardless of the source. W-2, interest income, rental income, dividend income. That money flows onto the books of someone else's bank. You're the depositor. You're the borrower. You're always working with borrowed money, even when you pay cash for things. You withdraw money from your savings account, you pay cash. You're permanently giving up the opportunity to earn interest on that money, not only for the rest of your life, but for every generation that comes after you. You're the borrower. When you need access to money to finance something, you've got to do that on someone else's terms, not yours.
Mm-hmm.
The banker decides who gets access to capital. The bank owner is the character in the play that makes most of the money, understandably so.